Hello and welcome. You're watching Closing Trades with me, Mansi Dave, and my colleague Snehi Shah. And at present, we have Sharon Lilani with us who will help us navigate through the market both on technical as well as indices front. But if we see a smart recovery is what the markets are witnessing at present, be it the benchmarks or the broader markets, 25,200 and above, around 33 points up move at present. We have recovered really well, both in Nifty as well as Bank Nifty, and at present Bank Nifty really showing good signs of positivity. Small cap and mid cap, the broader markets are also supporting the markets. The PSU Bank, IT, FMCG do lend support, and on the flip side, the metals, pharma, financials are lagging behind in the trade. Snehi, it's a good day. At least we see the Fear Index India which is also cool off, and the indices are also performing really well. Good afternoon.
So, good afternoon indeed, Mansi, because the recovery that we've seen on the market today looks interesting. It's not been all that much, but once again, we've edged towards the green and we're above the 25,200 mark for now. So, at least that is looking good. Slightly off the day's highest point, but not much to worry about because we're still about 35 points in the green right now on the Nifty. Similar moves coming in on the Sensex, a good 140 point uptick is what we've seen. Nifty Bank to 170 points almost in the green, a 0.3% uptick coming in. And like we have been chatting with our technical experts and our fundamental experts, it has actually come true that it's Nifty Bank that's actually leading the charge from the front and outperforming the entire breadth of the market, because a 0.3% uptick is what we're seeing on Nifty Bank. The advanced tick time ratio still continues to be in the favor of the advances like it was at market open today, and a 2% cut, a further cool off in India VIX is what we've seen, currently around that 11.2 mark. It's names like Wipro, M&M, Tech Mahindra, Nestle, SBI, Infosys and Adani Ports. All of these stocks trading anywhere between 1 and 2.5% from the Nifty 50 pack. Still, what continues to add some pressure to the Nifty is Shriram Finance bucking the overall market trend. A 2.5% cut coming in for Shriram Finance today is yet another day that Eternal is in the red, about 1.5% lower, joined there by Sun Pharma, Tata Steel, Cipla and Hindalco along with the Tata Motors. So that's what the breadth of the market is looking right now. But from stock specific action, a good up move is what we're seeing on Shilpa Medicare after they've received the EIR for their Bengaluru facility from the US FDA. So that's looking good. You have SBI that's going to be in focus. They've already announced 3,000 crore rupee fundraising via the Basel III bonds, and our sources also indicate that later this week, or in fact anytime this week, we could be seeing a 25,000 crore rupee worth QIP being launched by them as well. And here LIC is likely to anchor 7,000 crore rupees of this QIP. Other than that, too, some stocks are in focus in today's trading session. Let's talk about ICICI Prudential, because after the mixed set of numbers that the company gave, you have some moves coming in, or rather views coming in from brokerages, wherein downgrades have come from Investec and Elara. Investec has downgraded the stock to buy from hold, and Elara in fact to an accumulate from buy. So that is coming in from ICICI Prudential. So well, that's the take on some of the stocks that are buzzing in today's trade, Mansi.
Absolutely. So two downgrades coming in for ICICI Prudential, both Investec and Elara, and the downgrades and at the same time 2.5% to 3% downtrends, and a red pattern on ICICI Prudential at present. SBI, another stock which is helping the Bank Nifty actually, and also the home finance companies are also doing really well in the trades today. 2%, 831 level. We'll talk about this in greater detail while we talk with our fundamental as well as technical experts. And Shilpa Medicare, the EIR from US FDA is helping the stock move ahead in trade. But we have with us Sharon Lilani, independent SEBI research analyst, in the studio at present, and we also have Deepan Mehta, director Elixir Equities. Gentlemen, thank you so much for giving your time to ET Now. It's a pleasure talking to you both this afternoon. Sharon, we'll start with you. A smart recovery, and it seems as if all the stocks and the sectors are willing to participate in this recovery. How do you see the texture of the market at present?
So Mansi, a strong recovery led by the PSU banking index, especially SBI Bank. And I have been mentioning for the past 2, 3, 4 weeks, literally go long on SBI, do a buy on dips, you'll get good returns. Now the whole sector has actually given a breakout, and it's trading above its December 24 high. So very positive on the PSU bank index, and it's actually leading the Nifty as well as the Bank Nifty ahead. Even some auto sector stocks are doing good, M&M, TVS Motor, Eicher. So overall a good recovery. As mentioned yesterday also, 22,250 was a slight small resistance. Even the Nifty 20-day EMA is at that level. If we decisively close about 22,250, you can see a follow-up buying coming in, which can take Nifty to 25,400 odd levels.
Okay, so those are the levels that Sharan is spotting right now on the market. We also have Deepan Mehta who's joining us to give us a fundamental sense on where we're seeing the market. Deepan, hi, good afternoon and thanks for joining us. We've seen a midday sort of recovery coming in for the market today because the first half of the trading session was rather lackluster. And yet again, that sector churn has come into play because today you have PSU banks that have taken the buck from autos yesterday and now emerged as the top sectoral gainer. What do you make of this sector churn? Because earlier we were seeing this on a slightly longer, a 3-4 session basis, a weekly basis, but now it's come to the point where we're seeing a new sector emerging as the top sectoral gainer every single day. What's your take on the sector churn and where are you seeing value amid all this churning?
Yeah, good afternoon, and thank you for having me on your show. See, it's difficult to say why one sector will do well today and what will do well tomorrow. I think these things keep on happening. It's like predicting which stocks will do well. And when it comes to sector, if one or two stocks in the sector start to do better, then automatically traders get onto the bandwagon and they bid up the other shares also within the same sector. So if SBI starts to do well on a particular day, then tier two banks, Bank of Baroda, Bank of India, Canara Bank also start to rally because of trading interest. And then you have the feeling that the entire sector is doing well. But I think it's part and parcel of being in the market that some stocks, some sectors do well on one day and then be forgotten the next day, and some new stocks may emerge as well. And these rallies are difficult to predict whether they'll be for one day, 2, 3 days or so. So one can't really comment on this sector churn per se. As to your second question about where do I see value, I think it's getting very challenging to find good quality stocks at reasonable valuations. And I think the reason why the market is stuck on a sideways movement is because unless the corporate profits improve significantly from these levels, you can't justify higher prices because of the way the valuations are. And the liquidity remains so strong that at every correction there are buyers, but they're not chasing the stocks because end of the day, the professional fund managers, they are not just chasing the stocks higher and higher and expanding the P multiple. So unless we get support from earnings growth, I suspect the market may remain in this kind of a sideways zone for an extended period of time.
My point as well. There was a time when the sectors used to perform and then wait for some time at least. But now we see so much of sectoral turning on a regular basis. It's very difficult to actually pick and choose the one sector which will perform in trade. However, at present, if we look at the market texture, sector-wise, it's PSU Bank, IT, FMCG, Auto, Realty, Energy, amid select in this order, the sectors which are performing, and the pharma and metals have taken a backseat. Sharan, talking about the housing finance companies, if you see, Bajaj Housing Finance is showing good signs of positivity, and LIC Housing Finance too trading at day high, around 3% up move at present, while 635 levels, and also SBI. If we have a look at that, the QIP news which has come in, and early this week the QIP might be announced. Now this is the news flow which is helping SBI, but at the same time both housing finance as well as SBI in particular are giving good boost up to the bank Nifty. What's your take on them?
So LIC Housing Finance is looking very good. It has given a decisive breakout on back of volumes. If you see the last 3 days volume, everyday volume has increased on the buying side. So again, a very strong breakout. And now the stock is at a resistance of 635 odd levels. I think if it moves above 640 levels on the back of strong volumes, you can actually see targets of 660 to 680. So the stock is overall good. Again, trading above all its moving average, one more positive. High volume on the buying side, again a big positive. So I see the trend continuing in LIC Housing Finance. And in terms of Bajaj Housing, again, a very expensively priced stock is more or less consolidating on the sideways. So I don't see a major kind of movement coming in Bajaj Housing as per se.
Okay, so that's the take on some of these housing finance stocks. But on that note, we'll slip into a very short break and keep the conversation going towards the last hour of trading session. Hi there, welcome back to Closing Trades. We have a whole host of guests who've joined us right now to make sense of the market move that we've seen today. We also have Nagraj Shetty, Technical and Derivative Research Analyst of HDFC Securities, joining us. Nagraj, before we come to you, let's just address the Tech Mahindra preview that we have. All eyes are going to be on Tech Mahindra right now because very soon we are going to be seeing numbers coming in from this IT major as well. And my colleague Pulkit is joining us to understand what we can expect when it comes to Tech Mahindra's earnings. Pulkit.
After TCS and HCL Tech, now it's time for Tech Mahindra. So expectations are very different from what TCS and HCL Tech had. So if we talk about revenue in USD terms, we are expecting to be up around 0.6%. If we talk about in INR terms, we are expecting to be flat. For EBIT, we are expecting around 3% up, and for EBIT margin, expectations are about 30 basis point in an upside move. For profit after tax, we are expecting around 3% upside, and all are on quarter basis. If we talk about the Q4 particular business-wise expectations, for BFSI, cloud and digital offerings, they are expected to be in a good manner, but when it comes to the telecom part, which is around 35% to 40% for Tech Mahindra revenue, the revenue could be, or the business could be in a sluggish manner. For pipeline, yes, it is expected to be remain healthy, but when it comes to the revenue conversion for this pipeline, the expectations are not very good for this particular thing. If we talk about margin expectations, for particularly with the help of Project Fortius that the company started last year, we are expecting to increase our margin by some basis points with the help of this. If we talk about the management outlook and what we should focus in the management commentary, so the main commentary would be on the 5G, Gen AI and telecom business recovery, how they are shaping up and what is the demand outlook for these particular things, discretionary spend by clients, headcount and attrition trend inside the company, and the most important thing, that is tariff and geopolitical tensions, how due to this tariff and geopolitical tensions business is shaping up, and what the company is expecting for further FY26.
Okay, thanks for that update, Pulkit. And even before the numbers, we see an upsurge in Tech Mahindra. The pipeline remains healthy, but the caveat here is the execution, which is staggered. Nagraj Shetty is here with us. Nagraj ji, good afternoon. Thank you for giving your time to ET Now. My first question to you would be on the IT space, because after TCS and HCL Technologies, it's Tech Mahindra, and 23rd of July is going to be a very important day because Infosys, Coforge, Persistent, all of these companies are going to post the numbers. So mid-cap IT plays will also be in consideration. What's your view on Tech Mahindra along with the mid-cap IT and major IT players? And yes, your closing trades for the day.
Hi, good afternoon. I think the worst seems to be over for the IT right now, and most of the IT stocks have already started to move up from the lower levels, and even some of them will expected to move up from the lows. And as far as the Tech Mahindra is concerned, the last 3-4 weeks, the stock has been consistent downward corrections. Recently, it has placed at the support of around 200 EMA, somewhere around 1550 levels, and bounced back in the last couple of sessions. The overall chart pattern is looking positive. I'm expecting more upside from here onwards, and next overhead resistance to be watched is around 1680 to 1700.
Okay, Nagraj, so that's the take on Tech Mahindra. We've just seen a block deal coming in on Varun Beverages. We'll try and get you that exact number up to how many shares have changed hands for Varun Beverages. And yes, that's 1.24 million shares have been traded in the block when it comes to Varun Beverages. That stock is almost at the day's highest point right now, a 2.3% uptick coming in. In fact, it's not only Varun Beverages from the entire consumption space. You have Nestle that is doing very well. From the retail end of things, DMart is doing very well. Paints today, Asian Paints is doing well. So it's this entire consumption basket that is sprucing up, and major subsectors also seem to be doing well. But Nagraj, what's your take on Varun Beverages today? The kind of move we've seen today, the stock has not done all that much for quite some time now. What's your take on Varun Beverages?
Yeah, quite obvious. It is expected upside breakout after a long range-bound action, a gradual correction over the last couple of months. The stock has placed at the important support zone of around 450 and bounce back. This could be a decisive upside breakout for the stocks in the near term. So more upside is likely. Overall chart pattern is looking positive right now, and 550 is going to be the next hurdle one may expect from if the move sustains from here onwards.
550, if you see that as a further upside which can be expected in Varun Beverages, 2.5% up move. But Nagraj, did you give your stock specific recommendation? What are the closing trades on your radar?
I have two stocks from alongside. First one is from a housing finance sector, Bajaj Housing Finance. Chartically, this stock has been in a downward correction, a gradual downward correction with a range bound action. What we can observe on the near term chart is a triangular pattern, and the stock price is currently breaking above the triangular around 121, 122 levels. Currently trading around 123.40. One can look to buy at this point of time, and the upside target would be around 131. One can place a stop loss at 118. Second one is from a pharma side. Ajanta Pharma. Chartically, Ajanta Pharma has been in an accumulation phase. We can see the larger consolidation band within 2800 to 2500, 2550 levels, currently placed at the higher levels, expected to break above this consolidation band and move up. Currently trading around 2790 levels. One can look to buy at this point of time. 2900 is going to be the target. 2980 is going to be the target, and one will place a stop loss at 2700.
Okay, so those are some stocks that Nagaraj is liking at the moment, Bajaj Housing Finance and Ajanta Pharma. And in fact, Deepan, I was just going to ask you about not exactly Ajanta Pharma, but the entire pharma pack, because despite some good news coming in on Biocon and Zydus today, you still have, and now Shilpa Medicare as well, you still have Nifty Pharma that's joining the metals pack in the red of the market right now. What's your take on Nifty Pharma right now? Because fundamentally, we still have a lot of overhangs on the tariff front for pharma. But today, some pockets, like Nagaraj was just mentioning the names of Ajanta Pharma, you have Alchem, Gland, that are doing pretty okay for themselves. In fact, they're doing very well, but still the sector is under pressure. What's your take on pharma, Deepan, and any sub-pockets you're liking?
Basically, pharma remains under cloud because of Trump tariffs. And eventually, if there is even some amount of tariff, it's going to just increase the pressure on margins for these companies. In any case, I think competitive intensity is very strong in USA. So every company will take a choice whether to pass on or absorb the tariff if at all there is anything. But within the pharma space, we are very positive with usual disclosures on the CDMO space. And there, even if there are certain tariffs levied broadly across all formulations, the CDMO space is basically low volume, high value products. And because of that, I think they'll be able to manage any tariffs which are there. Also, the relationship which the CDMO companies have with their customers is pretty much long term and highly sticky. It's not commoditized. So, the best way to play pharma, according to us, is the CDMO space. Companies like Divi's Laboratories, I know they've had a minor setback just now, but they've emerged stronger from every challenge that they have faced. That's the largest company in India, which is into custom synthesis. There's also One Source Pharma, Blue Jet, which comes to mind, Cohance, Dishman. I think all of these companies have great prospects. Even Newland Laboratories is gradually growing its CDMO business. And there's Piramal Healthcare as well, which has got a CDMO business. So I think within the pharma space, you need to work with companies which have high proportion of revenues from the CDMO. I think that seems to be more like a stable growth business and clearly benefiting from China plus one strategy.
Absolutely. Pharma no longer is just a sector, but has been diversified into many sub-segments, be it the healthcare, diagnostic, hospital, laboratories, CDMO, CRAMS, and yes, CDMO is on the radar at present if we talk about, and as pharma is also doing the rounds and playing the role of the defensive as it always does right now, literally seeing a little bit of volatility. But two questions, two important ones. How should you position yourself in IT and pharma? The answer to which is what is given by our experts. Sharon, coming back to you, what are the closing trades and what are the stocks on your radar at present?
So Mansi, two stocks today, Tata Power and Bank of Baroda. Again, Tata Power has given a decisive breakout despite all the negative news regarding the case which they have lost. The stock is again moving forward and I have given a breakout of the descending trend line. So again, by the time our graphics were there, but the stock has moved out quite a bit, 5 odd rupees. So you can actually go long on Tata Power with a 416 odd rupees with a 6 rupees kind of stop loss around 410 with targets of 422 and 428. It's looking very nice. I think the trend will continue. Second, again, one more stock from the PSU basket. The PSU basket is looking very good and Bank of Baroda is on the verge of another breakout. So you can go long at current levels with a stop loss of around 242 and a target of around 256, 257 odd levels where it has a slight resistance. So I think these two stocks can be a good BTST trade.
Okay, so Tata Power and Bank of Baroda is what Sharon's liking at the moment. But on that note, time for yet another very small break. And when we return, we will keep the discussion going with our experts to track the last half an hour of trade. So you stay tuned and we'll be right back.
Watching closing trades with ET now. Indian benchmark indices did broke their 4-day losing streak. yesterday, and then there was no looking back. At present, if you see 25,225 on Nifty, a good recovery coming in from Nifty as well as Bank Nifty. If we compare both of them, the Bank Nifty is outperforming the Nifty, and the broader markets are also showing good signs of positivity. At least stock specific opportunities are many coming in from there. Deepan, one question to you: is there a merit in looking at the two-wheeler, auto and auto ancillary space right now? Because if we see in yesterday's session, auto sector was the one which is outperforming in trade, and the seasonality factor also plays out for the two-wheeler segment, the tractor segment at present. What's your take on that?
No, I think we are positive on two-wheelers, and the reason for that is that good monsoon and pickup in rural consumption always benefits the two-wheeler industry. And it's a cycle. I think they've had a couple of soft quarters, and now I think this festive season may turn out to be very good for two-wheelers per se. Valuations are reasonable. All the Indian two-wheeler companies are steadily making inroads into the export market, and the Indian two-wheeler companies, be it Hero MotoCorp or Bajaj Auto, or even Aisha Motors for that matter, they are in the motorcycle segment largely, where there's little less threat for EVs. But within the entire space, we are very impressed with the numbers coming out, production and sales numbers coming out from Aisha Motors. It's least likely to be disrupted by EVs, and its export business is growing really well. I think from almost a low single digit few years ago, it is now 14-15%. And that's got a great runway for growth. So with usual disclosure that we and our clients are invested, we're very positive on Aisha Motors and would rate it as amongst the best two-wheeler stock to own for the long term.
Okay, so strong conviction coming in on Aisha from Deepan. Deepan, thank you so much for joining us. On that note, we'll let you go. But well, time now to throw the spotlight on earnings once again, and let's take a look at some earnings that are going to be reported tomorrow from the Nifty pack. First up, let's talk about Axis Bank. That's all set to report its Q1 earnings come tomorrow, and the street is expecting a softer quarter with asset quality deteriorating and margins to be under some pressure. Varun is joining us with what to expect and factors to watch out for when the numbers do come out. Varun.
Well, we are expecting a soft quarter for Axis Bank, wherein the net interest income is expected to grow in low single digit. We are expecting the net interest income to grow by around 2.5%. The PPOP, that is expected to go up by around 9.9%. Although the slippages, they are going to be at elevated levels, we are expecting a 20 to 25% jump on a YOY and quarter-on-quarter basis, and that will impact the overall profitability of the company. We are expecting the profits to grow by around 5.5% to around 6,370 crores. Now, the company has been delivering single-digit advances growth since last few quarters, and this quarter also we are expecting the loan growth to be around 7.5 to 8.5%. Although the deposit growth, that is expected to be in double digit, we are expecting it to be around 12 to 12.5%. The company's credit cost is expected to grow in this quarter, and also the NPAs, if you look, they are expected to go up from 1.28% to around 1.4%, and also the net NPAs will increase from 0.33% to around 0.4%. The net interest margin, that is expected to decline a little bit from 3.97% to around 3.9%. So if you look at the overall results of Axis Bank, it is going to be a slow quarter, a soft quarter for Axis Bank, wherein the growth, the NII growth will actually be in low single digit, and also the advances growth is again going to be in single digit.
Right, Varun, thanks for taking us through that. So those are all the factors to watch out for and the numbers to keep in mind when Axis Bank comes out with its numbers tomorrow. But while that's on the earnings front, Sharon, what's your take on Axis Bank on the charts, given that we've seen a dip in January, late January, February this year, and the stock has recovered quite a bit from there, but once again seems to be in a lull lately?
Yeah, Sneh, so since 27 June, the stock has seen significant selling on back of higher volumes, and now it's almost at support areas. If, as Varun was saying, if the results are expected to be slightly weak, I think you can expect a good breakdown in the stock, because it's almost taking support at the 100-day EMA, I think 3 or 4 times. And looking at the chart, if the results are not good or up to the mark, I see a good breakdown. And next levels, you can see around 1130 to even 1100 odd levels. So we have to give a wait and watch. But if anybody is invested for the short term, I think your stop loss should be very close to the 1150 kind of mark. And if you get a breakdown, I think you can see very lower levels on a very like a single day, you can see a 3 or 4% kind of decline in Axis Bank, looking at the current chart pattern.
Okay, so decline is expected on the charts. We need to keep an eye on the results and once the results are out, we'll also review the results and at that point revisit the stock. But at present, 1168 are the levels on Axis Bank and 1130 is the level which is anticipated on technical charts. We have Daljit Kohli, Hair Equity Roha Asset Managers LLP with us. Daljit, good afternoon. Mansi this side. Thank you for giving your time to ET. Now we'll come back to you and take your fundamental take on the markets. But we also have Pulkit with us who is giving us an idea on the IT giant Wipro, which is all set to post its Q1 earnings. Let's go across to Pulkit and understand what are the expectations from Wipro coming in. Pulkit, over to you.
After TCS, HCL, Tech Mahindra, now it's time for Western India Palm Refined Oil Limited, that is Wipro. So if we talk about the Q1 expectation of Wipro results, so for revenue in USD terms, we are expecting around minus 1.1% dip. For INR terms, around minus 2% dip. For EBIT, around minus 2.5% dip. For EBIT margin, 16 basis point dip. And for profit after tax, around 9.5% dip. If we talk about the segment-wise expectation, BFSI and healthcare may remain good and it can provide the good cushion to the margins. But when it comes to the manufacturing, tech and communication, they will be soft and they might hit some on some margins. If we talk about the deal pipeline, it would remain solid, but when the revenue conversion comes in, it may remain sluggish. For the guidance that company provided last quarter for FY26 Q1, around minus 3.5% to minus 1.5% drop in CC revenue growth was expected. Now it would be great. It would be good to see how the company is shaping up with the results. If we talk about the key monitorables in the management commentary, FY26 guidance, what company is providing would be great to see. Update on the Merrily bankruptcy impact. Merrily was one of the client, so how it is impacting to the business. The discretionary spend from the clients, the headcount and attrition trend, and most important, the tariff and geopolitical tension, how they are shaping up with the business and how it can be helpful. So it would be great to see how the company is performing and how the share will perform.
Absolutely. Thanks for all of that update on Wipro. We'll keep an eye on the stock and also try and understand how the results pan out. There are a lot of factors and the management commentary which we need to watch out for. Around 2% up move on Wipro, 262 levels as we see. But we have Daljit Kohli with us. Daljit, good afternoon. Mansi this side. And my first question to you is on the texture of the market. One thing is for sure that there will be uncertainties coming from the global markets. But another thing which is sure is also that Indian markets are behaving quite maturely and the domestic macros for us are quite strong. How do you see the markets in the short as well as the long run?
Good afternoon, Mansi. Thank you for having me on your show. I think I concur with your view that markets will be driven mostly with the domestic cues because globally we all know what kind of uncertainty is there. And unfortunately, nobody can predict what is going to happen there because it depends on one man's tweet. So we have to wait for what we can do best is on the domestic front. And in fact, we as a portfolio managers have aligned our portfolio almost 80 to 90% to domestic facing companies since last 5-6 months, and we continue to do so. As regards on the domestic front, I think we are very bullish. We had released a note, I think 20 days back, where we said that there is a confluence of 4 or 5 factors which is happening at the same time. And that is going to drive the markets on a very positive side. So we are looking at, so one thing is, of course, that the rate cut cycle, which has started after a big pause, we have seen that this rate cuts have started and that too started with a lot of aggression. When many people had expected only 25 basis cut, they have done 50 basis points. Along with this cut, they have also given you the liquidity. 1% full was 1 percentage point, which means 2.5 lakh crore getting added into the system. These things will get reflected in the numbers in the consumption cycle over the next 2-3 months. So we push of liquidity, lower rate cycle, you have a good monsoon, which is fairly well spread out. You have a stronger rural, you have a good inflation number well under control. So these things are all concoction for a very good consumption cycle to start. And the last 3-4 years, we have not seen that happening. So most of these stocks are also available at a very attractive valuation and the macro picture is becoming good and good for them. So we are expecting that by the time of festivity seasons, most of these consumption-led stocks should do well. So that's one theme which will work very well. Secondly, because of all these global uncertainties, the positive influence of dollar or the favor towards dollar trade, that is reducing to a large extent. Now, of course, it will not go away. Nobody can replace them so fast and so easily. But even if there is a swing of very, very minute percentage, that can help us. So we are looking at that this might lead to some of the FI inflows coming into India in a larger chunk. And also it will help in this manufacturing base developing, because till now, last 4 or 5 years, people were only talking on planning stage, that we have to look at China plus one, new supply chains. But now this is a reality. Everybody understands that if the US, the biggest customer, is going to throw tantrums, what do we do? So they are all preparing themselves, and we are seeing that happening in electronics, in pharma, CDMO, in chemicals. These businesses are actually picking up very fast. There is actual action happening on the ground. Our channel checks are telling that it is no more just a planning stage or thinking stage. It is now actually happening. So which means that manufacturing will also pick up. So all these factors together will drive the broader markets. We may not see big numbers on the frontline companies, but we are very bullish on the broader markets.
So conviction coming in from the broader markets and lots of sectors that Daljit has just spoken about, where he sees value, where he thinks the next subcycle in the markets could be, and the sectors that he thinks could do well. But while we were talking about earnings, you have one company from the broader end of the market, that's Indian Hotels, that's going to be coming out with its earnings tomorrow. If you take a look at these numbers on a consolidated year-on-year basis, a decent set, or rather a good set of numbers is what we're expecting from IHCL. Revenue is expected to come in at 1,976 crores, which is an uptick of 27.5% year-on-year. In fact, based on different brokerage estimates and the consensus estimate, we're seeing this number anywhere between 1,900 to 2,100 crores. So that's a big band. So let's see what those numbers actually come up to be. EBITDA is seen at 577 crores, which is an uptick of almost 28% year-on-year. A very sharp uptick is what we're expecting to see in net profit, more than 30% uptick at 325 crores this time around, and a healthy upcycle in margins is what we're expecting to see at 29.5% compared to 29%. Some key expectations then: earnings growth is expected to be partly aided by the Taj SATS consolidation. Now, just to jog your memory, Taj SATS is now a subsidiary compared to a joint venture that it was earlier after this consolidation, and this was announced last quarter, due to which IHCL saw a one-off gain of 307 crore rupees. So that little bit of adjustment is still expected to be seen in the overall earnings of IHCL this time around. For Taj SATS, which is their air catering business, this is expected to grow at high teens on a year-on-year basis. Ginger Hotels portfolio expected to grow by 20%, and a high single-digit growth is what we're expecting to see in the international end of the business. The average room rate is expected to grow by 7% year-on-year, and the revenue per available room, that's RevPAR, growth is expected to be between 12 to 14%. Now, when the numbers actually do come out, what's going to be important to watch out for is going to be the management commentary on expansion plans, room addition plans, if any, commentary on the impact due to the border tensions that we've seen in North India. Remember, that was in the quarter gone by. So any impact on the financials on the basis of that, and contribution from new business verticals like Ginger, Cumin, AMA Stays, as well as Trails. So all eyes are going to be on a couple of these earnings candidates, the big ones tomorrow, and well, overall a good set is what we were expecting for IHCL. But Nagaraj, what's your take when it comes to Indian hotels? Because we've recently seen another listed player in this category, so some real competition seems to have entered the scene right now. But what's your take on IHCL, and where do you see the levels headed?
Yeah, Indian Hotels has been in a continuous downtrend. Recently, we have seen some choppy movement. It had made an attempt of upside bounces from the lower levels, but again, there is a strong hurdle placed at the higher level. Currently, showing some signs of upside bounces from the lower levels, and I'm not expecting any bigger upside from here onwards. Around 770, 780 is going to be the strong hurdle for the stocks in the near term.
Okay, so that's a take coming in for Indian Hotels. The expectations from the numbers, a complete roundup coming in from Snehi, and yes, on the revenues front, we expect around a 27.5% up move. The profit might see an upsurge of 31% and margins might stay intact from 29 to 29.5%. We'll keep an eye on this stock. Nagaraj, thank you for joining with us and giving your time and your technical analysis on the markets and the sector specific as well as stock specific approaches. It's 3:15 and as we see, the markets are doing great with the recovery that we did see in the second half of the market, and at present 25,200 and above, we expect the levels to sustain like this for Nifty. Talking about Bank Nifty, the banks and financials are also showing good signs of positivity, and the broader markets are also doing the positive rounds. 57,200, that's near for Bank Nifty, around 200 points up move. Sharan, do we have any BTST, STBT trades at present?
Mansi, I think these two are my good BTST trades, Tata Power and Bank of Baroda. I think you can stick to it. Tata Power has come down a little bit. Those who haven't added before can add now. Again, the levels remain the same, and I see good momentum continuing for both these stocks.
Okay, so that's two stocks that Sharan is liking at the moment. Just to address the flashes on the bottom of the screen, we have word coming in from the cabinet meeting right now, wherein the NLC India chairman, he's saying that the company is looking to raise 7,000 crores by the first half of FY27. They will be filing the DRHP for the listing of their subsidiary NRIL, via which they have been allowed to invest into renewable energy projects. This will be done by first half of 2027, and they expect to raise around 4,000 crores through this IPO. That stock seeing a little bit of a jump up. In fact, a sharp jump up right now, a 4% uptick is what we're seeing on NLC India. Sharan, any coverage on the charts that you have for this stock? Any levels you're spotting?
So Sneha, the stock has just broken above the 200-day DM and actually is broken above all its moving averages. So the stock was trading in a very tight range, and it's quite a bit, I would suggest, a liquid stock given its volumes. It's not that liquid also. But again, a very sideways to downtrend in the longer term. It's consolidating. One of days it sees upside and the next day it fizzles out more or less. So I would suggest wait and watch. If you can see a breakout about 243 or even 245, then you can think about going long on this stock. Otherwise, it's a hold as of now. It's anybody has made a position, and the stop loss should be then the system of 225 on a daily closing basis.
If at all you have a position, consider keeping it on hold intact for NLC India. 4% up move, 238. The cabinet meet outcomes coming in, and we'll also try and get you more takeaways from the cabinet meet outcome. Daljit, another thing over here, we understand that investors should focus right now on risk management and also consider buying on dips. But then which is the sector which will give some direction to the market at present? Do you think it's the banks and financials for which the results are awaited? And at the same time, do you think it's the consumption, because the seasonality factor is playing out with the onset of monsoon? Not just the consumption, but we also have buckets like fertilizer, agri-related spaces. What is it that will help the market for this quarter?
So broadly, yes, the rural-related sectors will play out because they have not played in the earlier rally, and we have seen things turning around for them. One, because of the monsoon. Second, because of the government support, with all these yojanas, the direct benefits coming to all these rural folks. They are getting a lot of money in their hands. So some of that can see place in consumption. Pharma can be one area. Pharma and chemicals will continue to perform well. But what I would say is that we are not looking at any sector taking a lead, because right now it is so dispersion within the sectors. Within the same sector, you might see some stocks doing very well and others not doing so well. So that means it is purely stock-specific approach. Sectors will be probably an outcome of that approach.
Okay, so that's the take on some sectors. But Daljit, talk to us about the earnings that we have seen so far, right? At till this point, like where we're speaking about this, 3 Nifty companies have come out with their numbers. All 3 have been below estimates. Tomorrow you have Axis Bank, you have Wipro. Today you have Tech Mahindra. We're not expecting any great set of numbers from these companies either. Do you believe that the beginning of this earning season could be bumpy and then maybe we could gain some recovery, or do you believe that largely this time numbers are going to be on the muted side?
No, I think that, initial numbers will be from the frontline companies, right? Now, frontline companies, they have their own issues. All of them have different kinds of issues. So they are not likely to do very big. That's what market was earlier also aware of, and nobody is expecting that they will do any big numbers there. It is the other end or the second tier, third tier, all those smaller companies that are likely to do very well. And that's what I meant when I said broader markets are likely to do well. One thing you have to keep in mind is that for broader markets, there will be a base effect also, which will help them. Because Q1 of last year was a washout due to elections. We saw that a lot of investments were or the expenses were cut down. So those, and therefore the numbers from Q1 last year was very bad. This time that will not be the case. Therefore, we will see some base effect also helping, and smaller companies will do well, mid companies will do well. Frontliners, they have their own particular issues depending upon their sector. That's why we are not building too much. But that too, over the period in our estimates, we are building that for the full year. We will see probably Nifty 50 companies doing something like 10 to 12% of our things.
That's right. The last quarter was benign, and the start of this quarter has been muted. We only expect the results to fare out well moving ahead. But yes, we are talking about the cabinet meet outcome, and cabinet has given a nod to slew of things. Prakash is here with all the details. Hello, Prakash. Good afternoon. What are the cabinet meet takeaways?
Yes, some significant decisions have been taken, and the first one is with regard to approval of PM Dhan Krishi Yojana. It's a sampling of various schemes being run by the government of India. Under new scheme, all approx 36 flagship schemes will be clubbed with an outlay of rupees 24,000 crore, and the basic idea behind this decision is to improve productivity, diversification of crops, and become Atmanirbhar going forward. Along with that, the Indian cabinet has also decided to provide its approval for further investment of rupees 20,000 crore by NTPC in its green energy projects. A very significant development coming in. Along with that, NLC India Limited has also been given approval to invest approximately 7,000 crore in its renewable energy projects going forward. It is important to note that this is not a grant from the government of India. It is approval to the company's board to invest and raise funds. So it's a very significant decision, especially in the fact that the government is trying to enhance its overall installed capacity as far as renewable energy projects are concerned. And for NTPC, the target has been set for 60 gigawatt renewable energy installed capacity by 2032, and for NLCIL it has been set at 10 gigawatt by 2030. Sources are also indicating that NLC will be filing DRHP for listing of NRIL, which is its subsidiary, by first half of financial year 2027, and expecting to raise approximately 4,000 crore through an IPO. So it's a very significant development coming in, and today Indian cabinet has given its nod to raise additional funds by NTPC and NLCIL. Back to you.
Okay, Prakash, thanks for bringing us all of those highlights. The cabinet meet is still underway, so we'll be giving you the latest updates on everything that has been discussed as and when the meeting comes to a close. But before that, Prakash was talking about two stocks, NLC India and NTPC. We just spoke about NLC India on the charts with Sharan. That stock is doing very well right now. About a 4% uptick is what we're seeing on NLC India. But NTPC, however, is absolutely lackluster and very flat on the charts right now. Sharan, your take on NTPC? Anything that you're spotting on the charts?
So again, Sneh, decent chart, seen quite a bit of buying in the last week of June from 20th to 1st. Again, it's just consolidating under the 200, between 100 and 200 day moving average. If it can see a breakout about 345, you can see good levels around 350 to 370 odd levels. So, but we'll have to wait for a breakout for a confirmation for the trend change, and it will only come about 345 odd levels.
Okay, so that's a take coming for NTPC. We watch out for 345 levels and then revisit this stock. But Sharan also talking about the real estate players, and yes, the upcycle for the real estate sector remains intact. Talking about the sector and the stock specific action, we see Brigade, DLF, Godrej Properties, Lodha, Sobha Limited doing good in trades today. For the ones who have existing position in real estate and for the ones who are trying to build their portfolio in real estate. What is the take at present?
So I think, Mansi, I think the benefits of the rate cut and the tax cut are about to flow in. Obviously, it comes with a lag effect of 3 to 6 months. So yes, there is a slowdown in real estate according to news. But if you see the numbers, YY growth in Gurgaon, Delhi, YY growth in Chennai, again one of the highest registrations in Mumbai. So these are quite beneficial for these listed players, especially Prestige, Lodha, and your Brigade Enterprise. And if you see the expansion, all in high growth areas. So I see definitely you can do a buy on dip strategy. Once the Nifty recovers, which we expect it to, I think in the next maybe 2 or 3 weeks, whenever. And Nifty really being a high beta stock, always follow Nifty and actually outperforms it. So if you go in with a buy on dip strategy, I think there is money to be made in the short and medium term. Stick to branded players like your Lodha, Godrej, Prestige, and Brigade. I think you'll make good money in the next 3 to 4 months.
Okay, so that's the take on real estate. Well, before we wrap up, let's just highlight one of the big movers today from the Nifty 50 pack. That's SBI, all set to launch its 25,000 crore QIP. That's the word we're getting from sources. Also, just a short while ago, we've heard the announcement that they have raised, or they've approved to raise 20,000 crores via Basel III bonds. Daljit, quick thoughts on SBI and all this liquidity that they're trying to raise. Could you speculate what the rationale could be behind this?
No, so on stock specific, I cannot talk because of the compliance reasons. But on the banking side, we are positive, and SBI is doing the right things probably. So that's the take on that.
Okay, so SBI are doing all the right things in terms of the kind of liquidity they are looking to raise. But with that, Daljit as well as Sharan, thank you so much for joining us on the show. We'll start winding down for the day, and for that,